Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Dalal Street is poised for a lackluster opening, if not for anything else, lacking direction ahead of key earnings. TCS is set to report numbers today and Delta Corp too would be coming up with numbers today. Nifty futures on the SGX indicate a mildly positive opening coming in for Indian equities. US stocks ended Monday's session on a mixed note with Nasdaq trailing rival indexes. In terms of the Asian shares, they've risen in early trade. However, Chinese markets see some selling pressure. In terms of the FIIs, they've been buyer for the last 6-7 consecutive sessions when it comes to the cash market at least. FIIs have bought in shares worth around 882 odd crore and DIIs, they have bought shares around 350 odd crore. But with that, let us get going and discuss some stocks and strategies today with Amar Singh, the Senior Vice President at Angel One. Good morning there, Amar. All right, so, we're going to be looking at the stocks and news ahead. We addressed the markets and the strategies before that. A couple of stocks that are actually working now in the favor that you need to keep an eye out will include the like of Kotak Mahindra Bank, State Bank of India, and also a bunch of other names that we have, something in the like of cement space, ABB, amongst others. Macquarie has come up with a report on the cement sector right now. It's spoken about the robust demand outlook and input cost moderation, which has led to the price improvement, which in turn has driven a constructive outlook. The note also says that it's not factoring in right now the cement price hike in FY24 estimates, and there is an upside risk which remains. It's maintained the outperformed rating for Ultratech Cement. Target price has been raised to 8,498 and also has maintained the rating, the outperformed rating for Dalmia, where the target price has revised to 2,260 rupees. It has maintained neutral rating for Ramco Cements and the target price also has been revised to 788 rupees. Kotak Institutional Equities, that's come up with a downgrade report on ABB, where it's downgraded the rating to reduce from buy and the target price to 3,425. It says that the assessment of the annual report 2022 just falls short of justifying the sustainability of the sharp improvement in the margin, working capital in the year gone by. Overall, it says that the 200 basis points year-on-year gross margin expansion and low 10-day of working capital in 2022 may be hard to sustain and grow. The other one that we're tracking this morning is State Bank of India, and bit of interesting one is going to be Kotak Mahindra Bank, which we're going to just address in a jiffy. State Bank of India, where the bank has decided to consider fundraising to an extent of around $2 billion in FY 2024 on April 18. The board has decided to meet on April 18 to consider long-term fundraising, which could be in the span of single or multiple tranches to an extent of around $2 billion. And this fundraising will either be public or private placement of secured, senior unsecured notes. Kotak Mahindra Bank, do keep an eye out on this one. Early in the morning, there has been a couple of reports, one from IIFL, one from Novoma. So these are the two brokerages which have come up and said that, the FII stake, they've dropped substantially to 41.2% as per the March quarter shareholding, which in turn could result into the FII headroom moving to 25.05% versus 22% currently. So that may lead to the MSCI actually doubling up the weight in May 2023. So do keep an eye out on this one. May 23rd review, this could see the inflow to a tune of around $690 million as per the research. You see, keep an eye out on Kotak Mahindra Bank and SBI. These are the two financials that we'll be closing watching out for in today's session. Apart from the cement names also, there's a small cap company that I like to talk about, Ugro Capital, where the company has decided to launch in the QIP. It's already launched in a QIP with the floor price which is fixed in at 149 rupees per share. Now the existing price is around 165, which already indicates a good amount of 5-8% kind of a discount coming in from the current market price. So do keep an eye out on this one. It's a relatively small cap name out there, 1,100 crore odd kind of market capitalization for this one. But remains to be seen. We need to check if Amar has actually joined us just to understand if, Bank Nifty and Nifty strategies out there. It's a key earning week out there. TCS will be reporting in the numbers. Amar, good morning there. How are you doing? What is the strategy doing for the Nifty? I mean, Nifty has already scaled 4 months high in yesterday's session, 6 consecutive sessions of rally out there. Do you think bulls are now showing any signs of exhaustion?
Yeah, very good morning. I would say that the momentum, short-term momentum, still continues to remain positive. So that's one good aspect. And if you remember, we have spoken about 17,700 and 17,800 being a key zone of resistance for Nifty. So we have, if we look at the levels, so it's approaching the 17,700 mark. So clearly saying that there is some upside, but yeah, there is going to be some sort of caution ahead first of the major financial numbers also this week. And also technically, I would say that there would be some level of profit booking coming at that. And also if we look at the derivative data, we are seeing short covering happening because the move, if we see the move in Nifty or Bank Nifty for that matter, that has been quite swift. So from almost a 700, 800 points rally has happened in less than almost a week's time. So clearly shows that bears have been caught off guard, and bulls have definitely had a good time. But 17,750, 800 would be the first, I would say, a stop for Nifty, because if it needs to sustain above that, and also we need to see long built up happening, that's going to be another important aspect, and how the earnings season kicks off with the major heavyweights like the IT, TCS, Infosys, HDFC Bank, and other, how they play out. So that these are going to be some of the factors. But I would say still, if you ask me from the short-term perspective, the short-term trend is definitely positive. Medium-term, I would say more of consolidation. So any correction should be a buying opportunity. As far as Nifty is concerned, support comes at around 17,600, 650. That's an immediate zone of support. Resistance again, 17,750, 800 is a zone of resistance. The biasness is definitely in favor of the bulls as far as Nifty is concerned. Talking about Bank Nifty again is reaching out to a key zone of resistance. So that would be around 41,400, 500. That's a zone of immediate resistance for Bank Nifty. Whereas support on the downside for Bank Nifty is somewhere around 40,700, 40,800. So this is a zone of support, again, consolidation. But yes, the favor is in, the market is in favor of the bulls from a short-term perspective. But one needs to be cautious at the same time.
All right. So, the favor is clearly in the, the breadth right now is in the favor of the bulls right now. Clearly, you can use that as an opportunity. And also ahead of the TCS earnings, I'd like to understand, your reading on something like IT names before you go ahead and give us the 3 profitable ideas to trade with for our viewers this morning.
Yeah, so you're talking about the TCS.
That's right.
Yeah. So looking at TCS, so what we see here is that, see, TCS has definitely a very strong base. So somewhere around 3,000, 3,100, that's a very strong base, because if we go back and see, so that's the level from where TCS has bounced back. So it was in September of 2022, from almost those levels, TCS had rallied by almost 20%, roughly. Again, it's around 3250 odd, but I would say that we shouldn't read too much into this, because the long-term charts, and talk about the monthly charts, they really don't inspire that much of confidence that TCS is going to go in a bull move or an uptrend in a hurry. That's not going to happen. So it's going to be more of consolidation. But yeah, it's a very good trading play for TCS. Any dips towards 3,050, 3,100, that's a good buying opportunity. Any move towards 3,450, 35, that's a good profit booking opportunity. So it's more of a consolidation play in TCS between 3,000 and
then kind of come back to you on that one. That's buy on dips. That's the strategy coming in from Amar, and the levels have been suggested thereof. Nifty 50, well, we are looking at a positive opening coming in for the markets for 7th consecutive session. So that's some amount of FII trend has also been suggestive of this start right now. SGX Nifty was hinting to a mildly positive. The markets have done better. 0.3% out there. 17,650 mark. It's staying way above that. So that needs to be, clearly it remains to be seen if we can closely actually go past that 17,700, 17,800 kind of levels. Do you remember last week when we saw the gains? That came in on low volumes. But this week, it's a little different. And also, it's an a week which starts the mark of the last quarterly earnings. Let's look at the Bank Nifty index out there. How is that stacking up for you? Bank Nifty index, 0.5% out gains on that one as well. 41,000 mark has been sustained. In fact, we're trading way comfortably above that mark right now, closely inching towards, actually hit 41,100 kind of level, also roughly flirting around that level. And if you talk about the other sectoral indices and how are they stacking up in trade today, well, Nifty IT index right now, it's not doing well. A little bit of caution, which is, underlying there. 0.2% of loss out there. Accenture came up with reports, good strong earnings, but revised the revenue forecast lower. Some amount of caution clearly building in for the IT index. Metal index has been holding up for you. And a metal index is actually doing well in trade, has been doing well, did well yesterday also in opening deals, and with Hindalco was one of the top picks out there at back then. FMCG index out there for you. 0.5% of gains even on that one. So that's one counter that we are closely keep an eye out. There have been reports that the monsoon is going to be below average. But still, just dismissing all of that, FMCG right now has been holding up in green for you. Auto index too has been stacking up in green, 0.3% of gains out there for the auto index overall. Pharma index too holding up the neck in green, 0.5% on that one. So pharma, FMCG, auto, all of them seem to be doing well, barring some amount of caution which is building in for IT names. And if you talk about the realty index, that one is really interesting one, because the kind of momentum that has come through in the last two trading sessions remains to be seen if the momentum is actually holding up. 0.5% gains, more than that, 0.75% of gains on that one. The RBI no rate hike science has actually gone down well for realty. Soba, a couple of updates, Godrej Properties, which came in and they suggested that good number of pre-sales for Q4. That's already lighting up the entire space per se. And if you talk about the overall advance and declines ratio, just to understand how the market breadth is stacking up right now, 41 advances as against 8 declines. But we're going to quickly address the top gainers and top losers for you before we tune into Amar again and ask him about what does he make out of the markets which are holding up in green for 7th consecutive session. Kotak Mahindra Bank, just as we indicated, the flows out there. If you could just flip it back and see, Kotak Mahindra Bank was one of the gainer that we have. Okay, Adani Ports, Bajaj Finserv and Bajaj. So Bajaj twins are the top two, they're leading the gainers list out there. NTPC, State Bank of India and Bharti Airtel. These are the ones also that are holding up in green in morning today. State Bank of India, we saw that fundraising plan come through. And if you talk about the top losers, we have TCS, which is down and out, reporting numbers tomorrow. Grasim, Asian Paints, these are some of the other top losers that we have on our list right now. HDFC, HDFC Bank and Tata Motors. So Bajaj twins are the top gainers and HDFC twins are the top losers out there. ICICI Bank is too trading down and out. But if you could quickly look at how Kotak Mahindra Bank has been doing, because there was this report from Nuvama, IIFL, both of them suggesting that MSCI might just double down the weight for Kotak Mahindra Bank given the headroom that we're seeing for FII. That is holding up in green for you. Gains of around more than a 4.5%. So we did indicate the financials, right? State Bank of India and Kotak Mahindra Bank. These were the two stocks that were on our list early this morning, which we spoke extensively today. And the stocks have been holding up in green for you. But Amar, comment on this one. What do you make out of something like a Kotak Mahindra Bank? There have been a couple of reports suggesting that the weight will be doubled up in the May review when it comes from MSCI. Remains to be seen, but IIFL and Nuvama at least suggest that. What are you making out of this? Charts look attractive.
Yeah, looking at Kotak Mahindra Bank, what we are seeing is that bank definitely has made a very strong base. So 1650, 1700, that was a very, very strong base, and currently it's around 1840. So clearly shows that there is upside move in this stock, and also on the weekly charts, there is a positive trend change. So clearly shows that the trend for the stock is positive, and on the upside, it could meet with resistance around 1950, 2000 levels.
All right, and also your view coming in on State Bank of India, because there was this fundraising report even coming in for State Bank of India. This is one of the top gainer today. Apart from the view that you have for something like a Bajaj Finance, which is holding up in green in today's session.
Yeah, so looking at SBI, State Bank of India, I would say it's more of consolidation, and we are seeing somewhat the stock would meet with resistance around 545, 550 odd levels, and even the weekly charts and the monthly charts, they don't really inspire that much of confidence. So it could be more of a range play. Looking at the other stock which you talked about, Bajaj Finance, again, I would say Bajaj Finance is also more or less, it's in a consolidation phase, somewhere around 58.50 on the upside, 6,000. So it's a range play between 5,500 and I would say 6,000. So it's a range play. Amongst all these, I would say Kotak Bank stands better placed, looking at the weekly charts.
All right, Amar, I'd also want to chat about the real estate names out there, something like a Godrej Properties and something like a Soba. What do you make out of it? Realty index has rallied good 7% in the last two trading sessions, although it's underperformed significantly from the start of the year. We've seen sharp corrections coming out there on that index. But do you think eventually the charts will kind of reflect the reality of this strong demand that we are otherwise facing when it comes to the pre-sales number?
Yeah, talking about the reality space, first speaking about Godrej Properties, see the stock, if you see, it's still down by 50% from its all-time high. So it was in a downtrend. It went in for consolidation around 1,000 odd levels. But in the last 4-5 trading sessions, the stock has really bounced back with a vengeance. I would say up by almost 20%. And also on the weekly charts, the stock has clearly shows that the worst seems to be over for the stock. And the stock, if it sustains above the 1,200 mark, at least for a couple of days, then it has a potential to rally towards this next key zone of resistance. That's around 1,350, 1,400 levels. Talking about the next stock, Shobha, if I talk about Shobha. So this again has a similar pattern, but I would say Godrej Properties on the charts looks better as compared to Shobha. So it has moved to 470, but again, it could fizzle out somewhere around 480, 500 would be a zone of resistance for the stock. And if I talk about the Nifty reality index, so this is one index which is really looking positive on the charts. It has made a strong base around the 400 mark, currently around 430 odd. So it has a potential to rally towards 450, 460 levels.
All right, and also what's not doing well in trade today is something in the likes of HDFC and HDFC Bank, right? What do you make out of that, especially for HDFC? What's your view coming in on that one?
See, if I look at HDFC, so HDFC clearly is positive on the charts. There's no doubt about it. So what we are seeing is that the stock did manage to rally from almost 2550 to the currently trade around 2700, 2750. And if we go back, we see that somewhere it has resistance around the 2800 mark, because this was the level which it had made in January, so 2780. So it's approaching a zone of resistance. So 2750, 2800 is going to be the next zone of resistance for HDFC. Till the time we don't see that taken out and consistently sustaining over that level, I would say it could be in for some consolidation on the downside, 25, 2550, on the upside, 2750, 2800. But looking at the trend for the stock, the trend remains positive for the stock, but for any further confirmation, it needs to sustain about 2750, 2760 and above.
All right, Amar, apart from the names that we have discussed thus far, do you think any more names actually fit in the bill and are expected to do well? We didn't quite discuss the, the strategy, the profitable bets at the opening deals, but what do you make out of right now? 3 names that you think can still do well in markets like these?
I would say one is Tata Chemicals. This is one stock one can definitely look at. The stock is breaching a crucial zone of resistance. So this stock is currently around 1,000, 1,008-10 levels. So it has a potential to rally towards 1,045, 1,050 levels. With a stop loss, one can trade below 980 to 83. This is one stock one can look at. TFC is another stock, very strong on the charts, on the long-term charts, on the medium term as well as the short term. It is inching towards its resistance zone of around 170. 172, consistently trading above that level because it's going to be a zone of resistance. But technically, the stock looks very strong. Any pullback towards 160, 162 can be a good buying opportunity for this stock with a stop loss of 152 and a target of 178, 180 on the upside. And the third stock one can definitely look at is Coal India, I would say. This is one stock seems to trade higher. It is consolidating above 220, 225, 230. The stock has a potential to rally towards 250 odd level. So these were three stocks one can definitely look at from a short-term perspective.
All right. So these are the names that Amar has suggested this morning. Thank you so much for taking out the time and speaking to us. Amar, we'll leave it at that.
Thank you.
All right. It's that part of the show where we address the fundamental story for you. Of course, there are crucial things out there, something like a TCS, Delta Corp, all of them will be reporting in numbers. TCS tomorrow, Delta Corp is something that all the eyes will be on. But before that, let's understand all of this earnings preview and how the market has been stacking up in the flavor overall from Aniruddha Sarkar, to Chief Investment Officer and Portfolio Manager, Quest Investment Advisors there. Good morning there.
Yeah, hi, good morning.
All right, so I'm going to start off by asking you about your assessment overall for IT names. Accenture reported, a beat when it came to the numbers, but it trimmed the revenue forecast. Also, US stocks were down and out in yesterday's trading session, US technology stocks. You think a bit of that caution is also building in for, for IT stocks? It's expected to be a gloomy reporting season for the IT counters overall. What do you make out of it? Or you expect it's going to be a less bleaker than what the street is anticipating, Aniruddha?
I think for the IT sector, big part of the negatives is already priced in, because if you look at the commentary from the management over the last 2 quarters, I think it has ensured that investors don't have very high expectations from that space. Having said that, I would say the biggest concern which is affecting all companies, whether it's Indian IT companies or the international IT companies, is the fact that the big projects or the demand that is getting pushed back. And that is where I would say when you have a large bench with your on your team, the expenses are going to be there, and that is where the margins get hit. So I would say the margin impact, the deal wins getting postponed, and I would say the growth which was visible for most part of 2020, 2021, those are going to be a big concern. I don't see very positive commentary from the managements of most IT companies in this quarter. There could be some improvements in some spaces, but broadly my view is that the sector will take some time to come out of the woods.
All right, so sector will take some time out, but within the space, are there any names you think will be doing better as compared to the rest of the counterparts? TCS, you have the other IT names out there. Do you think any of that could be an outperformer out there, mid-cap IT space versus the large cap?
So basically, without getting into the specific names, and I'll give a disclaimer also that, we might be invested into some of the names which I'll be mentioning about in case I mention. But I would say my broader view is that the mid-cap IT could do better than the large-cap IT. The simple fact being that most of the mid-cap and the small-cap IT names, they are operating in a very small space in the market, and they have become the masters of that area. So unless that specific sector or the small industry where they're operating, that gets impacted, those mid-cap IT companies will continue to do well. So I feel the big boys of the IT sector, whether it's Infosys, TCS, and the names which you mentioned, they might underperform the mid-cap and the small-cap IT companies.
All right. Also, Aniruddha, let's talk about the real estate space right now. The surprise move that didn't come through from the RBI. Eventually, we will see the trend catching up for the real estate players, right? When it comes to the rate hikes, eventually they'll have to wake up to the reality. Do you think that's kind of an anticipation out there when it comes to the rate hikes, when it comes to the inflation scenario? The numbers right now, Q4 updates that have been coming from at least few of the players indicate a strong demand down right on the market. You've seen the Bangalore rates almost shooting up to double, rent rates double to where they were. Do you think that trend is expected to percolate down into the financials of the company eventually?
Yeah, so the real estate sector is something, we have been bullish for a long time. In fact, the last almost 18 to 24 months, we have been very bullish on the real estate. And I often get this question that, are we already done with the sector? Are we at the peak of the sector? So my view remains that the sector has a lot of headroom for growth, even from where we are today. The interest rate peaking out is definitely one factor. And I would say the optimism which we saw in the last 1 week in the real estate companies because of the pause which the RBI has done, that would be, I would say, a very short-term trigger. The bigger, I would say, the upside remains that the underlying demand is very, very strong. And when we interacted over the last a couple of months with many of the builders across north, south, east, west, the sense we got is that a lot of buyers who were earlier invested into the equity markets, invested into the other areas, they are now getting back into the real estate sector. So a big part of 21 and 22, you saw the consumers buying the real estate company, the real estate properties. Now, again, we are seeing that leg of investors getting into the real estate market. Now, this is something where I would say demand is going to be very, very strong. So I don't think so. We are anyway done with the sector. Short-term pause can be there because last 1 week has been a very, very excellent rally post the RBI announcement.
You know, Aniruddha, just a little stock-specific view out there because Godrej property skyrocketed to almost 9% on Monday, right? After the March quarter updates that we saw, but we also got to factor in the fact that it's been a sector laggard for quite a while, falling almost around 40% for the entire FY23. You think with names like these, with the corrections that has come through, a little bit of update that has come through, it's a turnaround story now for companies like Godrej Properties, and the valuations are yet, pretty much like you indicated, that still discounted. How do you look at the names like Godrej Properties?
See, I have been always looking at the deep value or maybe the value market, and Godrej definitely doesn't fit in that parameter for me. The 40% correction which you mentioned, that was mainly on the back of the overvaluation which was seen in that particular counter. There were a couple of other names also which saw a massive 20-30% kind of a correction, and this was all to do with the multiples contracting. It's not that their businesses were not doing well. Having said that, I would say that as an investor, and as I mentioned, that we are looking at the value part of the market, we would be avoiding the expensive stocks in that sector. There is definitely the room for buying into the value names where the valuations are not so expensive, whether it's on EV by EBITDA or on the NAV basis. We need to ensure that you don't pay a very high premium for the real estate stocks. And typically what happens is when the good cycle happens, people rather the investors, they get, I would say, too much optimistic about that space and they go and buy at any price. And then we have seen what happens subsequently. So I would say that don't just take this short-term bounce of this quarter and the numbers they reported to get into some of these names, but look for businesses where balance sheet is extremely strong, the leverage is not much, and valuations are also compelling. So these three things have to be seen: balance sheet, the debt on the books, and also the valuations.
Also, debt on the books and the valuations, clearly these are things, and also it needs to be seen if the entire pre-sales growth actually percolates down into the margin profiles of these companies, right? That is one part of it, but I'd also want to chat about the gas companies. Overall, for the gas companies, if you saw that, there was this city gas distribution companies on Monday, after the government implemented, there was changes to the pricing model of domestic natural gas. These were the recommendations which were proposed by Kirat Parikh committee. But the market somehow, by the end of the day, did not quite the stock prices did not reflect that kind of enthusiasm, if I may so use the word, in the way the stocks held up or closed by the end of the trade. Do you think this move was mainly on account of the fact that A, this was already factored in, and B, people didn't read much into it, or it's a negative assessment out there? How are you reading into it?
I think most of that announcement which came from the cabinet, that was already priced in. In fact, the people in the market were already aware that, by in the beginning of the new financial year, you will see the revision in the gas pricing. And that basically, I would say it came on expected lines. So I would say the market reaction was absolutely in line with what the expectations was. So I wouldn't read much into it, to be honest.
All right, so one last question that I will squeeze in before we kind of wrap it up. It's on the two-wheeler recovery, right? things might finally be looking up for the two-wheeler segment overall, which has suffered the most since the start of the pandemic broke out. But Bajaj Auto sounded hopeful on demand recovery. How are you looking at the space overall? Do you see more steam left in this space right now?
Yeah, I would say that entire pack over there, the two-wheeler space, definitely agri side of the economy doing well is a big trigger. And after almost a gap of 18 to 24 months, we have seen the last 2 quarters, both the quarters have been good for all the two-wheelers, wherein the registrations for both the bikes and the mopeds have been very strong. My biggest concern is that, earlier, in fact, just a couple of weeks back, we were very concerned about the monsoons, how the monsoons will be, because, there's a expectation that there will be a deficient rain in this year, and that definitely it impacts the demand. Now, the immediate concern is that I would say the unwanted rain which has happened in some parts of the country, that has damaged the harvest to a large extent. In many parts of the country, when we just checked in this week, we got a sense that the harvest has been impacted. Now, how that impacts the household incomes, we need to see for some time. So I would not jump into the two-wheeler space at this point of time, unless I get a confirmation that the impact on the harvest has not been much. But as of now, it looks a bit on the higher side, and impact has been there.
All right, Aniruddha, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning. All right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching, and please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. For rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.